Sage here for Kalkine Media. Thanks for joining us for this trending news topic to follow. And please subscribe to the channel and press the bell icon to be notified of the latest videos. BNPL. Buy now, pay later, unbridled, convenience, or the wild west of retail. The buy now, pay later has become a rage in the past year as consumers have been quick to latch on to this payment method as an alternative to interest accruing credit cards. The BNPL sector is a rapidly emerging sector in the market, but it also presents challenges for policymakers as consumers have become subject to high fees as a result of missed payments. So what is BNPL? As the name suggests, BNPL is a service in which customers can purchase a product by paying the cost over an extended period of time as opposed to paying the full amount up front. And although this sounds like a credit card, the difference between credit cards and BNPL is that with BNPL, the consumer doesn't get charged with surprise interest rates, and the price of the product is split into more easily digestible payments, and there's 0% interest to pay in many cases. And typically, if a customer wishes to purchase a product, he or she will be required to pay the full amount over 4 even monthly or fortnightly payments. And the customer also has the option of making additional payments if they want to pay off the amount quicker. For example, Kalkine, one of the leading BNPL companies, requires customers to pay an amount upfront and then 3 instalments every month after that. Lay-by Group, on the other hand, requires an upfront payment followed by 6 weekly instalments. While BNPL previously only targeted online shoppers, it has become increasingly available in stores too. And when at the checkout at a participating store, a customer simply needs to request BNPL as a payment option. In some cases, this will automatically be suggested as a payment option without the customer having to request anything. Although BNPL can offer a solution to paying a large sum of money for a product, it's not without its perils, and merchants are charged a transaction fee if they wish to accept BNPL. However, for merchants, having BNPL as an option can increase sales, and when a merchant makes a sale using BNPL, the BNPL firm will pay the full amount for the product. So the firm is owed the payments rather than the business. So BNPL companies don't make money on interest like credit card companies do. Instead, they take a cut of the product they are helping the consumer purchase. In return, retailers have the opportunity to make sales they might not otherwise make if the customer was required to pay the full price up front. So no fee lunches. While BNPL offers a convenient alternative to paying the amount for a product, consumers should be careful not to look at BNPL as easy money. In other words, the consumers will always end up paying the full price for a product. Given that BNPL remains a relatively unregulated industry, the responsibility falls directly onto the consumer. If the consumer doesn't pay the agreed upon instalments on time, the incurred fees can often end up costing more than the original price of the product, and in some cases can end up far outweighing the original price. And moreover, late repayments of instalments can wind up adversely affecting a consumer's credit rating. Most BNPL providers reserve the right to file missed payments with credit agencies, and once a consumer's debt is passed onto a debt collection agency, the consumer's credit rating will likely be adversely affected. In November of 2020, the Australian Securities and Investment Commission, or ASIC, reported that 21% of BNPL users had missed a payment in the last 12 months. More regulation coming for BNPL. And while the BNPL industry currently remains unregulated, this is likely to change in the future as Australian consumers increasingly complain of heavy late fees. And although regulation would benefit and protect consumers, it may slow down the industry in the short term, as its rapid growth in recent years has been largely because consumers are offered a quick and easy way to get credit. The BNPL industry has so far been able to avoid regulation, as the no-interest loans they offer are not subject to the provisions of the Australian National Consumer Credit Protection Act of 2009. However, in March of 2021, the industry pledged to regulate itself by requiring retailers to conduct thorough financial checks into consumers wishing to purchase items using the BNPL. And in the meantime, regulators will consider what's best for the consumer before deciding whether further action is required. BNPL Growth. The unregulated nature of BNPL, whilst perhaps not protecting the interests of consumers, has meant that the industry has achieved unhindered growth over the past 3 years. Leading ASX-listed BNPL players like Afterpay Limited, Zipco Limited, Sezzle Inc. and OpenPay Group Limited have reported strong operational results over the past 12 months. The last 3 months, however, have been challenging for the industry, with the stocks witnessing a considerable decline during the period. In 2020, the BNPL payments accounted for 10% of all e-commerce transactions in Australia, coming at the expense of credit cards and bank transfers. And moreover, the rise of BNPL has resulted in a decrease in credit cards being issued as millennials opt to purchase products without the burden of crushing interest rates. This has even impacted banks, which have opted to remove fees on low balance cards to compete with the growing BNPL industry. And in fact, some Australian banks now offer cards which fall into the BNPL structure, shying away from the structure of the traditional credit card. Thanks for your time watching, and if you like this information, please like, share and comment on the video below, and please subscribe to the YouTube channel, press the bell icon to be notified of our latest videos, and for regular updates and more information, please head to the website kalkinemedia.com, and this is Sage for Kalkine Media.